Hey guys, this is Tony Benson with Wealth Builders HQ and creator of Patterns in Flash. This week we're going to review the patterns we found last week and also check in on the other ones that are still in play. Before we do that, let's get the disclaimer out of the way. It basically says I am not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything that we do here is purely for educational purposes. If I do say anything about a trade or mention a trade, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. So with that, let's take a look. Last week we found Alcoa and Schlumberger. So let's go over to the charts and check them out real quick. And I'm going to zoom this in. We've got a double top. Actually, I'll zoom it out first. You can see the beautiful double top there, right? It's a lot easier to see on a line chart. We've got a double top here. It doesn't officially confirm the pattern until we break this midpoint here. So we still haven't confirmed it. Now, you can, if you're aggressive, catch this right here if you're timely and you have the guts. Okay, that is a very aggressive place to enter the trade, and obviously you would have taken a little bit of profit out of it. But let's get back into it, and this vertical line is the day that we highlighted this real quick, looking for it to possibly continue. This right here is one very good reason we always wait for the confirmation, for the break of that midpoint. This is the midpoint of the pattern. If it doesn't break there, it is a support level, right? And that's exactly what it did here. 4 days ago, it hit this level, the midpoint, and it bounced. So once it breaks there, then we have confirmation. So that's what we're looking for on this. So this one is still in play. We still have some possibility here if it moves back down. We'll just have to wait and see on Alcoa. So we'll keep an eye on that. Schlumberger. This was also, in fact, let me get in there again, another double top. You can see it right here, right? And again, the midpoint, which did not break. So we've got two double tops that neither one of them confirm the pattern. And this makes a good point, this is why it's important to wait for confirmation. Most of the time. Sometimes it's justifiable to get it a little early. Or if you can catch, like on Alcoa, you could have made a nice little profit. If you caught this right here, this is only a couple day drop. Not likely to catch that. But Alcoa, there's maybe a possibility of that. So here it just bounced and took off to the upside, which oil's on the rise because gas prices are high. All that stuff is kind of crazy. But energy sector is interesting right now. But you can see the beautiful head and shoulders back here that we had that we played, right? It was textbook. Anyway. I don't have time to go into that. So we had two patterns show up. This one is negated, basically. So Schlumberger is off the radar. This will be gone next week. Alcoa, we'll see what happens with it in the next week as far as what kind of price action we get out of it. So to go back and review the other ones that may still be on the radar that I haven't kicked off yet, AES is still just dancing right on that trend line. So if this makes a break to the downside, I would be possibly still interested in it. One thing just to note, is Alcoa comes out with earnings tomorrow after the market, and Alcoa kind of kicks off earnings season for the most part. So we are right at the beginning of earnings season. So make sure that you double check for earnings before you pull the trigger on a trade. If you have Omega charts, usually there's a little triangle down here. I think one of these has one. Let's see. Disney does not, but this is another one too. Another head and shoulders. You'll see it if we get one down here. There's a little dividend one here, but we still have a big giant head and shoulders on Disney. And it's still sitting around, just kind of dancing around that neckline. But it's also got that really solid support right there. You can see, 5-6 times it's hit here. And it's been dancing around that level. So if it breaks below there and it continues lower, I would be interested. And this would be a longer-term play on Disney to the downside. Kraft Heinz, this was a bullish candidate. In fact, I adjusted the inverted head and shoulders. So we're looking for this to move to the upside if it breaks above this neckline. Once again, no pattern confirms until it breaks the specific point that we need it to for that pattern. In the inverted head and shoulders, we need it to break the neckline. If it breaks above there, now there's a possible trade. If it doesn't, stay out of it. Alcoa and Schlumberger are perfect examples. Alcoa specifically, where it went down to the neckline, to the support level, not the neckline, but the midpoint. It went to the level we're looking for and then bounced. So it used it as support. Right now, this level, that black line that you see as a neckline, that is resistance right now. And until it breaks above there, there's no confirmation. Lowe's did kind of sort of break out. As I said last week in this review, not excited about this anymore. It's just gone sideways for too long. And now over 5 or 6 days, we've moved up quite a bit, really gappy. It's been very volatile the last few days. It's been really volatile. Lately, it's more volatile than normal. And it's just been wild and crazy. I don't really believe in this breakout. If you look at the volume the last couple days, let me zoom that in a little bit so you can see it. The volume the last 2 days has been just abysmal. 1.3 million today. It normally does 3. It did a third of the normal volume, and the day before too. We recognize this resistance level at 210. At this point, I would consider this to be a false breakout. I don't like that at all. I wouldn't touch that with a 10-foot pole. Microsoft, that vertical line I highlighted, this is another double top. And this one actually did break the midpoint. And as of right now, we're testing it again, which is exactly what we want to see, actually. We want it to break down, break the midpoint, and then rally back up and test the old midpoint level. We got just a tiny bit above it today, but not very much. Volume was really light. It's been really light the last few days. There's earnings. In fact, it tells us, if we hover on that, it should give us, maybe, well, what day is that? 1025. So they come out in 12 days. So there's about a week and a half before Microsoft comes out with earnings. So if you can squeeze a quick trade in before earnings, great. But if not, it's usually best to wait. Micron, this is one I just wanted to, well, should be off the radar, but this is one that I've been watching, and this is, the reason I left it on there was AES. Very similar picture, right? Even though it's different industries, right? Very similar picture, and look at what happened with Micron. Very similar picture, and it has broken down. A lot of the tech sector's been getting beat up the last few days, and this one went right along with it. So this is a descending triangle that I highlighted back here. I can't remember exactly what day, but somewhere back in here we highlighted it, and it just danced around here and came back to this resistance level. It broke it for a day, but then it got back below it. So there was still some possibility there, and now it's moving lower. So Open Door is another one. This is one I looked at right back here. Had the double, triple bottom right here, looking for it to break to the upside. It moved so fast from 14 to 18 when it broke here. Let me zoom that way in, actually. It moved from this low up to 18 to the entry point so quickly. I was just really skittish. So I didn't pull the trigger on it, and a few days later, I was glad I didn't. And then I did think about it. It started to move back above here, but I went, maybe, maybe not. Is it good? Kind of him. But I wasn't that excited about it. I don't know why. There was just something in my gut, and obviously your gut's not always right because it did break above, and it would have been a nice little, I probably would have gotten stopped out right about here. So, probably a buck and a quarter profit on an option. This was a possibility of maybe getting back into it, and obviously I wish I would have, but there really wasn't any indication. In fact, we had kind of an evening star here. So to say I should have gotten in here, there's just not much there to say that that would have been a good entry point. I mean, obviously you can see what it's done, but hindsight makes that easy. But if you're sitting here, and let me just do this for fun, if you're looking at this day, are you looking at it going, yeah, I'm going to jump in? You got the evening star pattern going on right there that stopped this rally. So you have a bearish reversal pattern. And the next day, it's like, it's not that convincing, very light volume. The next day, okay, it's good, but not much volume. But then it's so far away from the exit, there's too much risk. And obviously, it took off and ran. But it's easy to Monday morning quarterback and kick yourself. I should have gotten in right there. Well, yeah, but there's no way to know, right? Just a little side note there. A little mindset lesson, if you will. Starbucks still got a beautiful head and shoulders and still looking for that thing. It has actually tapped the entry point a few times. I've been waiting on this. Earnings is coming up too on the 28th. So depending on what tomorrow looks like, this may be a possibility, but we'll see. You just got to wait and see how it plays out. And paper trade it all. Fund it, paper trade it, whatever you're comfortable with. Just make sure you are careful. This market is crazy, and I think this earnings season is going to be super, super volatile. So I am going to be very, very cautious, not holding as few overnight as possible. Let's put it that way. So anyway, that is it for this week. Let me get back to where do we go here? There we go. That it is. This is a pattern whisperer signing off, saying if you're going to fail at just one thing, fail at quitting. Goodbye.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I've put together just for you.